Hello there. This is a teaching coming to you from the Training Place of Excellence, and it's a teaching on Sales Ledger Control Account. Again, Sales Ledger Control Account is one of the control accounts that you could find, and the control accounts are there to complete your double entry process, and they also stand as a check against the individual ledger accounts to which they relate. So the Sales Ledger Control Account is an account that connects with the sales, and it connects specifically with your credit sales. So control accounts are summary accounts which enable you to see at a glance whether the general ledger balance for the ledger to which that control account is set up for agrees with the total of the individual accounts held within the ledger. So you'll have your sales ledger, and you have the sales ledger control account. So the control account against sales that the company is involved in, and specifically the credit sales that the company is involved in. And the Slca account, which is also known as debtors control account, and trade receivables account, those or this with the different names, is an asset account. And asset accounts carry debit balances by default. So it implies to me that anything that is going to increase the balance of the debtors account will be debited to the debtors control account, or Slca. As I've mentioned, they are all different names for the same account. And anything that is going to reduce the balance will be credited to that account. So that implies to me that if I have sales, credit sales will increase the balance, so we will debit that amount, whatever the amount is. And if you have cash receipts, payments received from credit suppliers, cash check, whichever format it comes in, it will go on to the credit side because it will be reducing the debtor's amount. You also have credit notes. If the customer is giving a credit note, that will reduce the amount that the customer is owing you. Discount allowed. If you give them any prompt payment discounts or discounts of any other form, you will then find that what they're owing you maybe was £10, they're now giving you a £2 discount, or you have allowed them a £2 discount. That will then mean they're owing you only £8. The same thing with bad debt written off. If somebody was owing you before and you write off the debt, that means the person is no longer owing you. Then you also have contra entries. Contra entries implies to us that if you buy from me and you sell, and I sell to you, or vice versa. So in my hands, you are a customer and you are a supplier. That then means that if we then sell to each other, and maybe I owe you some money, you owe me some money, we can then tell, you know what, let's knock off the lower amount. I owe you £60, you owe me £30. You know what, rather than me pay you 30 and you pay me 60, let's knock off the 30 and only £30 will then become payable. So what are we doing with contra entries? In this case, we are reducing the amount of debtors by the agreed amount in the Slca, and the same thing will apply with the PLCA as well. You'll be reducing the amount in the PLCA account by the agreed contra entry amount. Let's look at an exercise, and I'm going to throw in the answers into this table, and then I will ask you to close the account, because I'm sure you can do that. Balance owing from credit customers at the beginning of the month of July. That is a debit. So we just throw in the figure into the debit side. And that's the 1st of July. I'll just put in the figure in there, the date in there. Money received from credit customers. Somebody was owing me, they've paid me, it will reduce the balance in Slca account. So the double entry for this transaction will be a debit in the bank and a credit in Slca account. I'm throwing the credit in there. Bad debt written off. You have bad debt written off. It's going to reduce the amount that is owed to you. Discount allowed. it's going to reduce the amount that is owed to you. Goods sold to credit customers. You are selling some more and selling some more. They're owing you. That will increase the debtors balance. Goods returned by credit customers. Goods returns usually will attract a credit note, so I'm going to throw it in there. And those are the only items we have on the list. The rest of it is just to close this account. To close your account, you have to get the total of the debit and the total of the credit, then find the difference of the two totals. Get the total of the debit, you can write it down on the side. Get the total of the credit, write it down on the side, then get the difference. Then close the account with the totals, and then of course you can bring down the balance. I want you to close this account, and then of course you can compare it with mine. So can I ask you to pause your recording and then you can compare it with mine. So we have a closing balance of 88011, and that literally is set out in there on the credit side and then brought down in the next accounting period on the debit side. So our next accounting period will be 1/8, since we did it with July up there. Then the next month will become my opening balance, and this is a simple Slca account. Please do bear in mind that you have Slca, you have PLCA commonly used, then you also have so many other control accounts as well. Alright, I hope this has been useful. The rest of it is keep working hard. Adios. Don't forget to like the button, subscribe to this video. If you've got anything of value from it, subscribe, follow us on all the social media platforms, and keep watching, keep listening, and keep learning. Thank you. Adios.